Hi everyone and welcome to our market analysis videos here at Forex. My name is Connor and I'm the Senior Market Analyst at the company, providing to you these daily videos on market analysis and educational content as well. Now for today's video I'm going to be giving an update on my previous GBPUSD forecast, and to do this, as always, I'm going to run through the fundamentals first to see what events are coming up and how it's likely going to shape the direction of this pair. I'm then going to move on to the chart where I'm going to identify these key levels to watch out for and to aim for the rest of September. And at the time of recording this video, GBPUSD is hovering around the 1.38 mark. Okay then, so let's have a look at the fundamentals driving this market. So over here in the UK, there has been hints of a possible firebreak lockdown in October. This has been rejected by the Health Minister, but sterling investors have remained cautious still, which is we'll see on the chart in a minute. We've heard something that won't happen before, but over here it eventually does, and to be fair, it's going to depend on if COVID-19 hospitalisations rise, but a sudden lockdown next month would cloud the UK's economic recovery, and it would hit both the manufacturing and the services sector. Therefore, we'd likely see a fall in the sterling if that's the case. Hopefully it's not. And really dominated by the US as always. Over in the US, attention has firmly turned to whether the week's jobs report that we had last Friday has impacted the Federal Reserve's plan on tapering its bond purchases. And if they do delay any further, then this evidently is showing that they want to keep their expansive policy, which really would keep the dollar down like it has been really this year. And in my last pound dollar forecast, I mentioned the Jackson Hole meeting, and I'm going to provide just a quick update. Many had favoured tapering on a tighter schedule, especially after all of the hawkish talk from the FOMC members beforehand, yet Jerome Powell was dovish. If you fast forward to now, add into the mix a week's jobs number report, the increased risk of the Delta variant, which is clouding the global economic recovery, a delay is possible, and yesterday New York Federal Bank President John Williams said that more progress is needed in the labour market to achieve the substantial further progress, is the phrase they use quite a lot, for the Fed's maximum employment goal. He did add, however, that it may be appropriate for Federal Reserve to start reducing the pace of their asset purchases later this year if the economy continues to improve. But this is no real surprise to any of us. They've said December for a while now. So you could consider this dovish. I think the markets did. And maybe a hint on what is to come throughout the month. But I think it's clear overall that the Fed are remaining patient, and it's kind of a waiting game to see how the economy continues its recovery, which I think is understandable. Just have a look at the chart now and have a look at some key levels. Okay, let's have a look at the chart now and try and really make sense of a market which isn't doing too much at the moment. But something I have noticed, where if you go back to September of 2020, you can see this really nice clear uptrend. Obviously it's much easier to be trading a trending market, but you just see where we've topped out recently. When I say recently, sorry, this is back in May, but you can see I'm on the daily chart, we're looking at some swing positions. You can see that the market really has topped out here. And what I find quite interesting is now, much like the oil video that I done at the beginning of the week, we're now starting to almost change trend really and shift to the downside. You can see that if I zoom in on the structure here, you can see that this structure low was broken, and at the same time we did have a break of the 200-day moving average, and that was back in July. And now we're just about hanging on to this 200-day moving average. You can see that we did close above, but it wasn't really convincing. We run straight into the 100-day moving average and we've closed back below again. So anyone who's trading on the moving average plays, potentially you can see this, well, you can see this 50-day moving average crossing below both of the 100 and the 200-day. 200-day being this one, 100-day this one, and the 50-day this one. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenforex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenforex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. So potentially you could have a selling opportunity if you wanted to be aggressive with a stop loss potentially just above the swing highs here. and you might want to aim for the lows or even create potentially a new low if we're in favour of selling this market. That's one play we could have. But what I'm seeing mainly, I'm seeing this happening. I'm seeing a market squeeze at the moment where we might get a situation where we get this descending triangle pattern. So basically what happens is the market changes trend to the downside. We then get a squeeze in the market and we're collecting liquidity from buyers and sellers. And then we really want to be trading the breakout either side. If you're looking at the market direction at the moment, it's favouring a break to the downside once we squeeze into this level, down at around 1.37 as well, which coincides really with the fact that that's quite a psychological level to trade from. We may get a break below, and then we can trade on the retest and down. We could get a situation where it does break above, and we then get a nice firm close above this 200-day moving average. The RSI starts to tick up because we're in that 50 level at the moment, so we're very, very neutral. And then we can trade the retest again, and then we can go looking for, really as a take profit, those swing highs at 1.42. That's where I'd have my buy and take profits. Any selling take profits, if I zoom out on the market, then we're looking at clear lows that we can aim for. I think we could aim for something like here. Obviously this is a swing hold, and I'll go down on the lower chart to try and find something a bit clearer as well. But yeah, as a whole, really are just consolidating in this pattern. We're threatening the downside move, but at the same time we could just be holding this pattern before another wave to the upside. So I think it's important to be patient in this market and to be waiting to hear how the Federal Reserve are going to react to that week's jobs number and what they're going to say about asset tapering, because this will be dominated mainly by the dollar as well. If I move down onto the 4-hour chart, I'll just delete those drawings for you. Again, we get this situation where, obviously this is just more zoomed in, we have this situation where we're just consolidating and we're just squeezing traders in. I'll move down onto the 1-hour chart, we may see something a bit clearer. So what you could have, if you wanted to be aggressive, you can see that this low actually held. Let's get that in the right pattern. This low held, and you can actually see that we had a bit of liquidity that was taken, which is a sign that the market wants to go higher, and we had this nice bullish impulse, which again is another indication of market manipulation here. We've gone and retested, we formed a new higher low, and now we're looking to break up to the upside. There's some inefficiency that we can see in here, and where could we get this buying opportunity from? 1.376 potentially, and then a buying opportunity from there would yield something like nice tight stop loss. This is a very intraday position, so I'd only be risking half of what I normally do, maybe even a quarter if I'm down on the 1-hour chart. And then we can look to potentially aim for 1.385, which is the next available high, or even down at 1.38. Yeah, 1.385 is absolutely fine. Move that out of the way. I would take profit up there, and then that's a nice 11.1R trade as well. We'll just wait to see whether the new high is formed. We may get a reaction from this 100 simple moving average as well. And you can see the RSI ticking nicely to the upside. So potentially a nice buying opportunity there on the intraday as well. But as a whole, a market which isn't doing too much, but it's kind of, a storm's kind of brewing. Depends really what the Federal Reserve, how they're going to react in the next coming weeks. But I'd always give an update on this forecast anyway. Hopefully we see a bit more movement then. But other than that, guys, as always, keep continuing to like and subscribe to our channel. Make sure your notifications are turned on as well, and always drop in any comments on the comment section. If you can make sense of this market, then I'd love to hear what your thoughts are on that as well. Other than that, guys, hope everyone has a great rest of the trading week, has a good weekend, and I'll catch you all next week.